Welcome to Trading Nation. I'm Sarah Eisen. He is known for selling the Prudent Bear Fund to Federated investors just as the financial crisis was hitting. David Tice is the fund manager that was behind the nearly perfectly timed transaction. Welcome, David. Hard to believe it's been 10 years since the crisis. What's your take on where we are right now?
So I'm nervous, Sarah. Of course, I've always been nervous. I've actually made a couple of bullish calls for melt-up scenarios. Right now, I think we're getting closer to a meltdown scenario. I think sentiment, the daily sentiment indicator is right at 80, a very high level. You look at the DeMark indicator for exhaustion, showing a lot of exhaustion in a number of the indices, very similar to what happened back in January. I think the market's very high. Everybody's into this market. You look at emerging markets, there's a lot of trouble in emerging market currencies where we've broken the new lows. And frankly, I think there's fear of deflation picking up again. This secular trend that we've had for deflation, even though there's been talk of a little bit of inflation and us being out of the deflationary woods, I think that deflationary trend is likely to continue again.
So, David, I guess I'm wondering if you could put your sort of bearish view in context for us, because I mentioned, you timed it right when it came to the financial crisis, but you said yourself you've been bearish and negative and seen risk where others have not since then. So what's the level right now of concern?
Okay, you are certainly right that we have underestimated. I think that's pretty true of a lot of bears. We underestimate the degree to which policymakers will go to such extremes in order to kick the can on down the road. And we've had unprecedented largesse from central banks around the world. As I said, a couple times I've been on Trading Nation recently, I've been thinking that a melt-up could continue, that the market is going to rally. I'm actually looking at the inversion of the yield curve. There's a lot of people that are complacent about thinking that the market could, even after the yield curve inverts, we still will have 12 to 18 months before the market actually declines, before there's a recession. I'm a big follower of Raoul Pal, one of my favorite strategists, and he talks about the 2 to 10 year swap spread and looking at that inversion. And we're only 11 basis points away. What's interesting is you don't have that 12 to 18 month reprieve. You typically have encountered a recession very quickly after it inverts. And so that's something I'm worried about, whether the economy could enter a recession faster than a lot of people think.
Certainly is not a consensus view, but we thank you for your thoughts as always. David Tice.
Sure, glad to be with you.
Good to see you. And thank you all for watching Trading Nation. I'm Sarah Eisen. We'll see you next time. Hey traders, did you like that video? There's more where that came from. Scroll down and click on the links to the right of your screen. We publish new videos and commentaries from our experts every day. And don't forget to follow us on Twitter @Trading Nation.